Hey guys, welcome back. Today is Friday, March 1st. I'm going to finish setting up this mentoring session, and then we will get started shortly with the session for today. Good. All right, looks good. Let me get this link sent out to you guys here in the premium. All right, so I'll get a few moments for people to make their way in. But if you guys have any questions, feel free to put them in the chat. There's not really too much to cover today. I guess there's two entries that came up, the V1 variation of confluence down here and breakout V3, of course. So if there's any other questions, feel free to pop into the chat. Otherwise, that's going to be pretty much our main topics of discussion for today. I'll probably cover also how to check your trailing drawdown like I did during the live if you guys missed it. I think that's very useful as well. See if I can open it up here. Let's leave that there for now. All right, guys, welcome back. Today's Friday, March 1st. It is, we're back for our mentoring session. So like I just said a little while ago, our main focus for this mentoring session is going to be the two entries that came up during the live session today, which would be the breakout V3 continue or breakout V3 and the V1 variation with confluence over here. Other than that, I'll cover also how to identify your trailing drawdown on Tradeovate. That's kind of what we covered earlier. I think that's super useful for a lot of people here so that you guys can see how far you are from your trailing drawdown, which shouldn't be a problem as long as you're using proper risk, you're not over trading, and you're not revenge trading. So, all right, if there's any other questions, put them in the chat. Otherwise, we'll start off with the V1 variation with confluence right over here. So the V1 variation with confluence came up over here at about 7:06 in the morning. And let's go over the criteria. So the first criteria is that you want to look for a double body or double wick rejection, right? So right here, you can see there's a double body, double wick rejection, or sorry, double body rejection right here off this red and green candle. It's off the lower low. And this here would be identified as a V1 variation. We also have a pending momentum, so everything here would have lined up. But on top of that, we want to confirm that there is a V1 confluence, right? The V1 confluence gives you that basically that extra that will pretty much give you the confidence to take the trade because it'll show you that price is actually rejecting off a very strong support level and odds of it pushing up higher are very likely. So with that said, this over here, let's see. Question from Hawk. Hawk's asking, does pivots or trend meter play a factor with the V1 variation to the upside? So technically, yes, but I mean, it kind of just depends on the person, right? Because like you have the standalone strategy, like the foundation. This is the foundation of strategy. But if you want a really high quality entry, this is why if this came up, I wouldn't have taken it because the trend here was bearish. But this just looked like such a good entry, right? Because it was also lining up with the breakout V3. So I think this is why a lot of people decided to take it. But for me personally, I would want to trade in the direction of the trend. So although it's not necessarily or required, it's another confluence that I consider like top three confluences that I need. I need that V1 confluence, but I also need the trend so that we're trading in the proper direction. So yeah, for this specific strategy, the V1 variation, and for the breakout V3 continuation, not the actual breakout V3, I typically would take it only if it's in the direction of the trend. So yeah, right here, I personally wouldn't have taken this trade because it's so strong in the downwards trend. But this confluence here is very strong because we're already looking for a buy here for the breakout V3. And then we were also looking for a buy with the V1 variation. So, you put two and two together, that if you feel confident, like a lot of people did, they would take it. But for me personally, I wouldn't. So again, this is the V1 variation. We have the V1 confluence right here. This is basically a double bottom off support. I personally didn't take this trade, so this is not going to count towards the official entries. But for the people who did take it, obviously it pushed up and it went straight to full TP right there. And then this pretty much lined up for our entry for the breakout V3. So this right here is the V1 variation with confluence. And then moving forward to our breakout V3, this is where our breakout V3 came up. So we had a buy signal right here, and we had a green candle following it. That's just the breakout V3 by itself, right? But for our live session trades, we make sure that we have a confluence. So in order to have that confluence, we look back over here to make sure that there's a V1 variation pattern, which is a reversal pattern pushing to the upside. So we have this right here, identifying that there's a reversal happening. And then we have this as a confirmation that price is likely to keep pushing up higher from there. So this is why we took this here for the breakout V3. Another confluence is that we had another rejection right here. So it's a double bottom off this structure right here. So this just lined up perfectly, right? We had a double bottom off this rejection. And then we had the continuation right here, or a confirmation. And this is why we took the breakout V3 right here. And as you guys can see, price kind of went sideways for a bit. And then it went straight through on the next candle, straight to full TP. And then it pushed up higher to opening price, which was the original target to begin with. We expected price to push up to the opening price, but our TP was right there. So we got out immediately where we were supposed to. So yeah, if there's any other questions regarding that, guys, feel free to pop into the chat. I mean, you guys did amazing today. I think everybody here did really good. I think Madhu's in here right now. Big congrats to Madhu getting funded on his Apex account. He just posted it up. So Madhu over here just got funded 150K. Nice work, Madhu. I'm right behind you guys. Hopefully I'll be there by next week. If we have another hot streak and we continue to keep hitting these breakout V3s, I should be funded on a good handful of my accounts by next week, hopefully. So great work, Madhu, right there. But yeah, so I think that's it for the two entries that we had for today. If there's any other questions regarding entries, guys, feel free to chime in. Otherwise, the only other thing that I wanted to cover today was how to identify your trailing drawdown. So when you log into your TradeAvate account, you'll click on this plus button right here. When you click on the plus button, there's going to be this option that says accounts. You'll click and drag that account button down to wherever you want on your chart. I dragged it down to the bottom right here. And when you click on the settings button right here, you just want to turn on distance to drawdown. So if you turn on your distance to drawdown, it's going to show you where your trailing drawdown is. I've had two back-to-back wins this week so far with the breakout V3. So you can see I have no trailing drawdown anymore right now. I had trailing drawdown before. I was like down like 4,000 because we had one loss on, I think, Wednesday. And then we had two other back-to-back wins. So now I basically had no trailing drawdown. It's at the max 5,000 right now. And that's how you would identify where the trailing drawdown sits on your TradeAvate account. So, I mean, pretty straightforward. Again, this shouldn't really matter to you. The trailing drawdown shouldn't be a big deal because if you're using proper risk and you're using proper contract sizing, then you should never be close to hitting your trailing drawdown. Let's see, Vince, sorry, I missed it. Can you show how to see the trailing drawdown? Yeah, Vince. So you'll have to log into your TradeAvate account. So go to the TradeAvate website, trade.tradeavate.com. And then once you're on this, like this is what your workspace looks like, right? You probably don't have accounts down here, but you just have basically a chart and some random boxes here. You can just close all those boxes, click on this plus button right here. There's a plus button on this top left-hand corner, Vince. When you click on that, there's gonna be a drop down, and on the drop down, it's gonna see accounts in one of the options. You'll click and drag the accounts to your workspace so that you can see it on here. Typically, it'll just have account, cash amount, and P&L. So what you'll have to do is go to your settings button, which is right here. And then you have to turn on distance drawdown. Once you turn that on, it's going to show you where your trailing drawdown is. You can see over here, most of my accounts are at 5,000 because I don't have a trailing drawdown right now. It's at the max. And then these over here are slightly trailing behind it. So if I have another win, say for example, I have another win on Monday for the breakout V3, these are all going to be 5,000. So I have my trailing drawdown will be maxed back to where it's supposed to be. And it's super straight and super straightforward and easy to follow. This way you don't have to like look at every single account. Because if you look at every single account, it's annoying, right? You have like 20 accounts, like, dude, I gotta look at every single account to see what my drawdown is. If you just put accounts right here, it'll show you all 20 accounts or however many accounts you guys have, and it'll show you where your drawdown's at. Yeah, no problem, Vince. Let's see. William said, yes, today was very satisfying. I'm glad you're about to be funded. I'm right behind you. Nice job, Madhu. And like someone said earlier, 1K a day keeps our jobs away. Yeah, life is good. I agree, William, 100%. You know, if you guys can stay consistent, like it's really about consistency when you're trading, not just with Apex, but in general. You know, I see a lot of people they take advantage of this 1 day pass with Apex. They pass the account in 1 day and then they blow the account on the next trade. That's not how it should be. If you want to YOLO it, feel free to YOLO on the evaluation, but make sure that you don't carry that over to your funded because that's such a waste of money, right? You think about it, you pay for the challenge, the evaluation for like 60 or 80 bucks, then you pay for the activation fee for like 280, and then you blow the account. Like, what's the point of that? You could have literally taken small trades, get your money back for the cost, and then you can start YOLOing it if you really wanted to. But for the most part, you know, there's no longevity in getting lucky in trading. I'm pretty sure a lot of you guys know that by now, right? You know, trading is not something that you consistently get lucky at. I mean, yeah, you can get lucky like every couple times, like maybe a couple times a week, a couple times a month. But if in order for you to trade consistently month over month, you can't keep getting lucky. You have to have some sort of plan in place to follow so that you guys don't make mistakes. And if you do get lucky, great, but you're able to cut it off when you go down a losing streak. So I've seen that happen with a lot of people, and it sucks because they'll get funded and then they'll take like 2 trades after and they revenge trade their way into blowing the account, or they just don't use a stop loss. I think that's how a lot of people are passing. They're not using a stop loss and they're getting lucky because price will continue climbing or it'll come back to their price, and they'll just make profit that way. So, all right, guys, I think that's it for the session. If there's any other questions, feel free to put them in the chat right now. Otherwise, we covered the breakout V3 right here. We also covered the V1 variation with confluence, both full TPs. As you guys can see from the group, there's a lot of people here who locked in some massive profits over here. Yeah, Drew said it's not to show off to everyone, but for everyone that's skeptical about Apex, you know, this is how much he got paid out off of a couple of his accounts. He locked in 8,250. This is the wire from his from Apex to his bank account. So yeah, definitely awesome work right there, Drew. And now you're gonna make way more, bro. You made like 20,000 today, so you're about to lock in even more over the next couple days in payouts. So other than that, see, Eddie said he can't find. Here, I'll just add Eddie to it. Yeah, I guess I could just open this mentoring group or I guess once we're done with the mentoring, you know, the cycle, I can just open it up to everybody because everybody kind of wants to pop into it anyways. But it's good to see a lot of you guys here. So Randy over here, he's now back in profit for the month. So he was positive on week 1, slightly negative on week 2, went negative on week 3, and then this week he locked in 75 points. So now he's in positive. Same with Kevin over here, right? Kevin is climbing his way back up too. So nice work, Kevin. You should be back in profit by like next month, hopefully. But for the most part, you guys are doing pretty good. So yeah, if there's any other questions, guys, feel free to put them in the chat. Otherwise, we will wrap them up. We'll wrap it up soon. Here, let me see. I'll just copy this over for you guys who want. I use the copier. Oops, this is the wrong one. Console. Yeah, so this sets up for you guys who want to use the same copier as me, I use Replicanto. There's a promo code, it's 20% off. It's usually like 150, and I think it's like 120 with the discount. But it's pretty much, I mean it's like a free discount basically for the Replicanto. Let's see, one last question here from Bloom. Bloom's asking, can you go over liquidity entries? Seems like the second touch usually hit, but have trouble getting in on time. Um, sure. I deleted the liquidity. Let me see if I can get it back on. So I mean, for the liquidity trades here, let me see if I can just because I don't think I'm gonna I don't think I'll be able to I'll have to rewind it to like 6:30. 6:30 right here. Let me go back one. All right, let me just mark it up again. Turn this off. Yeah, so Nathan over here said that he does a three touch. So, I mean, some people do it on the first touch, some people do it on a double touch, some people do it on the triple touch. Like Nathan, I think Nathan has that's the best way to do it. Best way is either second touch or a third touch. If you guys want to take it on the second or third touch, you can just put a pending order. Now that we're on Apex, you guys can get in at exact price. You don't have to like guess where the price is at. That was a problem with liquidity before because we were trading it on FTMO and the price was never the same. So it was always hard to gauge, okay, like where am I supposed to enter at, right? Because you have to like kind of guess, like, okay, this is where liquidity is, but it's not really there. It's like it was close, but it wasn't always exact. But now that we're on Apex and we're using raw price, you can actually get in at exact price point. I mean, I don't trade liquidity, but it's still very good. I mean, it depends on who's using it, right? But yeah, liquidity is it's a good strategy if you know how to do it properly. I feel like liquidity is it's a gateway into getting into trading addiction, right? I've seen a lot of people where like they do really well with liquidity, and then they just get greedy because the liquidity comes, but it doesn't always come very smoothly or very accurately. So I see a lot of people they'll start to take shortcuts, which is not the way to do it. So all right, I have pretty much all the liquidity here marked up for the most part. Let's go back to the 1 minute. All right, so let's see. Hawk is asking, do you enter the market order or have it pending? Yeah, so basically, if you want to enter on the first touch, Bloom, like for example, if prices, and this is like one way that I would personally, fuck, why does it look like this? I thought I marked it up from 6:30. It like just reverted back to actual time. The hell? I gotta redo it again. Sorry, guys. All right, it's not gonna take that long. I can do it pretty quick. Let me just do it super quick. I hate when you do the replay function and then it doesn't go back to where it's supposed to go. So I think they should be good. Let me fix it real quick. 6:30. Okay. Here, I'll just mark up we're just gonna use the example for like the closest price anyway. So I'm not going to, and I'm not gonna change the color. I'll just make them all blue because we're just using this for example. It's not like this is actual liquidity. So I'll just leave it at that. Keep it close because we're just using this for example. I don't want to draw all of them. It's pretty unnecessary. Okay, 2 hour. Minute, 2 minute, and we're good. All right, back to the 1 minute chart. Sorry guys, I don't know. I don't think I'm gonna be able to show you guys, but basically, I don't know what's up with my chart. It just whenever I go forward, it goes straight to it goes right to actual time. But anyways, I'll just show you guys. So like basically, um, I don't know what's up with my because I'll go to 6:30, I'll mark it up, and then as soon as I go forward by one candle, it goes to normal time. And pretty much all the liquidity that I marked up is like not there anymore. But yeah, basically, I mean, it depends on how you want to do it, Bloom, because you know, I could tell you exactly how I did it, but you're probably not going to do it that way. A lot of people don't like to do it that way because I'm like, I would enter market order. So basically, the way that I would do it personally is I would do, and I'll just show this as an example. I know there's no entry here, but let's say, for example, there's liquidity right here, right? What I would do is I would make sure that price is moving in that direction. So I'll look for the pivots, I'll look for the momentum. And if I see prices climbing up right here, I'm like, okay, price is probably going to come and hit this area here. So the way that I would do it is when price gets near it, like when it's like really close, like say, for example, it's pushing up a little bit, like not there, not the full candle, but say, for example, price is like right next to it, I would just hit a market order for a buy. And then I would get in a little early, like right here. So my entry would be slightly below it. And then it would just go straight through. But I'd be looking to make sure that price is actually going that direction, right? So price kind of pushes up right there, and I'm like, okay, there's another level of liquidity right here. And that's how I would do it. So again, right here, same thing. Price got really close to it right here. And I would just enter like right before I hit it. Like right before I would get into it, I get in at like prime entry right before entry, and then it would go right through. And that's how I would do it. But like what Nathan said over here, he waits for like a second or third touch, right? So sometimes what he would look for is he'd look for price to kind of touch it and then kind of go back and forth a little bit, right? Touch it, retrace, touch it, retrace, touch it. And then on the third touch, that's where he would make his entry, right? Which would be like somewhere, I don't know, over here or something. If it comes back up right there, third touch. So you know, everybody does it slightly different. You can wait for like a later entry like this. And if you want to wait for that third touch, then what you could do is as price pulls back, you can just set your pending order right there. That's one way that I used to do it before too. You can see the prices right there, 39,052. And when price pulls back, like say, for example, down here, and you're like, okay, price is probably going to push back up because trend is bullish and like price is likely to push back up higher. You could just set a pending buy stop order right there at 39,052. So as soon as price comes up and you don't have to worry about it, you know, as soon as price comes up, it just automatically fills your order and it goes straight to your TP. That's one way of doing it. You can do immediately market order like I do, or you can do double touch, or you can do triple touch like Nathan does. But it's just up to your preference. Like we can show you a bunch of different ways to do it, but when the market's actually moving, your mind's going to be all over the place, right? You're going to be scared. You're going to be nervous. You got to use what works best for you. And that's how you can do it. But I mean, they all work the same way. Like if you were to go for the second touch, like you still would have hit TP right there. If you did the immediate touch or immediate market order like I do, you would have hit right there. If you waited for the third touch like Nathan did, you still would have hit TP right there. So it's just up to preference, and you got to figure out what works best for you and what your trade psychology will allow for, because it's different when it's happening real time versus going back and kind of showing you. But yeah, I mean, if that makes sense, Bloom, you know, let me know if there's any other questions regarding that. Feel free to pop in too. But yeah, guys, I think we covered for the most part everything here. Liquidity is a great strategy. It's a great strategy if you use it properly. For me personally, I like trading it when like it's moving in my direction. Like I don't try to take the counter liquidity. I try to trade in the direction of trend. So for example, over here, like price was pushing down right here. And you see how like we have liquidity right here and we're in a downwards trend with the sell signal. In this situation, I do the same thing. When price gets near this point, like again right here, when price is pushing down, I would typically just wait for it, have my finger on the sell button. And then as soon as it comes down, I would just take my entry and then hit my TP right there. Or again, if you wanted to do the second touch, you can wait for it to retrace right there and then see how it's second touch right there. So this again, here's the same thing. Price came down, touched it, and you look for the second touch. You just put your pending order there. As soon as it comes down, it fills the order straight down your full TP. So, I mean, there's a lot of different ways to apply it. You got to figure out what works best for you. Yeah, Bloom said, yeah, thanks. Liquidity messed up my trading psychology, so I'll just test it on demo or something. Yeah, you got to be careful with liquidity. This is what I mean. Like, you get greedy sometimes. A lot of people get super greedy on liquidity. And the thing is, if you want to apply liquidity, you have to keep applying it. You can't just take it one day, because one day might be a good day, one day might be a bad day. And that's where it screws up your trade psychology, because you're like, does this actually work? Or is it just me? Right. And I'm pretty sure a lot of you guys have second guessed that sometimes. You just get in your head too much. And you're like, is this proper? Or am I just like not doing it right? And that's just how it is. And then also avoid red flags, like what Ryan said. Yeah, avoid it when it's at sessions. Exactly. Avoid all the red flags for sure. Yeah, Randy also said liquidity gets funky on trap Tuesdays. Messed up on that before. Yeah, Nathan said liquidity is dangerous. Got spanked too many times. That's why he ended up doing 3-touch. Yeah, and that's how you get better, right? So Nathan would kind of like lose a lot, and he's like, okay, I keep getting faked out, so he just waits for that third touch, and that's usually where his sweet spot is. So that's usually what it is, guys. It's like it's trial and error, right? For me, I like to get in right away, so I get into a little early, and then I get in at a discount basically, and I get that full 100 pips or 10 points. But for others, they want for that second or third touch, which there's nothing wrong with it. I mean, personally, I think that's probably the smartest way. I think Nathan's way is actually the best way. I just never thought about the third touch, because sometimes it blasts right through and never comes back. All right, yeah, no problem, guys. Let's see. Last question here is from Eddie. Eddie's asking if looking for the breakout V3 and the candle closes in opposite of momentum. Yeah, it's valid. It doesn't matter what color the candle is for the momentum. You're just looking for momentum, Eddie. So it doesn't matter if it's a red candle and a green momentum. That's cool. You still look for the green following candle. So the actual momentum candle doesn't matter. The momentum is just a confirmation that price is going to keep pushing that direction. It doesn't matter what color that candle is, but the one following it has to be green. So like, for example, right here, like this is a perfect example of what you just said, right, Eddie? There's a red candle within it, but it's a buy momentum, but the candle after it is green. So this doesn't matter because your entry is not on this candle. Your entry is on the following. So this would be fine right here. That's where you take the breakout V3. Same with these. I mean, this is obviously ideal. It's ideal if you get the green candle before it, but it's okay if you don't. So like right here is a buy signal, green candle after it, take a trade there. Same thing. Yeah, no problem, Eddie. And I just added you to the group, Eddie. So this group is not meant for everybody who's in premium. This is only people who are part of the mentoring group. But I just added you to it because I know you want to learn too, so it's all good. So that's why you couldn't find the link earlier. I just added you in like after, so that you can sit in if you'd like. But all right, guys, I think that's it for today. If there's any other questions, feel free to reach out. Otherwise, we're going to wrap this up. We covered pretty much everything today and all the extras that were necessary. So, all right, guys, have a great weekend, and I'll see you guys back here on Monday for Market Open.